Welcome back to another episode of Hard Money Dispatch, the show that helps you demystify sound money and see the system for what it is. Today's guest is Nick Slettengren. Nick led a successful marketing company to a sizable exit and then quickly discovered the nightmare that is crypto taxes after being an investor himself. And that led him to founding his next venture, which is called Count on Sheep, a crypto tax advisory service. Nick, welcome to the show.
Brian, thanks for having me.
So, as I just mentioned, you built and sold a marketing company to a sizable exit. Take us back to that moment. What did winning look and feel like to you right after that exit?
So what it felt like when I exited my company, well, it happened twice. So, I mean, the first time was pretty unbelievable. You just never think it's going to really happen. You're going through a lot of paperwork to get it done. You're positioning your teams and you're going for that exit. And when the check comes, it's an interesting feeling. You almost feel kind of alone. And I would, I wouldn't say that, it was over the moon, just happiness at that point. I was feeling like, something, I just left something of myself behind, and I think a lot of, your ego gets wrapped up in what you do, and so much times, especially as a man, I feel like, what we do is who we are in life. And, so I was kind of struggling with those demons a little bit. And then, then you come to grips with it and you kind of see like what's the next chapter, and it's kind of a beautiful thing. You kind of let it go and you find out what else are you passionate about in life. And that's kind of what it was for me on that first exit. Then we're lucky to have a bite at another bite of the apple, if you will, in 2022. And that really was, a game changer as well. That one I was not as involved in as, the first one per se. But with that said, it was, still a magnificent time in my life. And so many things were changing. And I was really kind of figuring out what the next venture was going to be. And it really led me to crypto. Had a crypto portfolio since 2015. And I want to figure out how to get into that market, and I wanted to figure out like, what's the next thing for Nick. And ultimately, I looked at all the different DeFi protocols. I looked at NFTs. I looked at everything that the crypto scene had to offer, and I couldn't figure out where the convergent point was, where it all bottlenecks. Where's the point that the central node that everybody has to basically come into in crypto? And I was trying to identify that for years. And for me, it became crypto tax because I started having an issue with my crypto taxes, my personal crypto taxes. I can get them reconciled correctly, and no one was doing it at the time. So, I knew crypto needed a hero in the accounting department. And that's ultimately where, my career changed from digital marketing to crypto accounting.
Me of the founder of Loom, which for anyone unfamiliar is this really great software that allows you to record yourself speaking at the same time you share your screen and create a video. And they have all sorts of new AI tools for summaries and all that. But the founder of that company sold it for, I think it was about a billion or more. And he made this really depressing Reddit post afterward, super long, saying about how depressed he was and so lost in life and like broke up with his girlfriend, just didn't know what he was gonna uh, do next. So it's like, I think everybody probably has that image of like, this is the pinnacle in life, what everyone strives for. But it can be a little more complicated than that, it sounds like. So before we move on and get into the crypto stuff, really quick, would you have any advice for entrepreneurs who are going through that transition phase, whether it's an exit or a career change or one business failed, they're moving on to another? Do you have any advice for them?
Absolutely. Well, I think in life, you have so many different opportunities to rebuild. And I think people don't understand that rebuilding, after an exit, like what would you have to rebuild? You've already built so much, but it's really about taking a step back. I mean, when you're selling, you're giving that away, so everything you built, you are selling to someone else and you are giving it away. So that's a huge, piece to consider. And, and the beauty is like, now you're free of this thing, but sometimes you feel like you don't want to be free of it because you were so just entrenched in the day-to-day activity. But you want to rebuild yourself. You want to, and there's so many opportunities. And I mean, after my exit, a lot of things fell apart. My first marriage fell apart. A lot of things, like the money wasn't all it seemed to be, and money certainly doesn't buy you happiness. So I'll throw that out to the viewership right now. It helps, get, as an instrument in life, when you're building different things and when, but it's certainly not going to make you happy. And I realized that pretty quickly. I would say to the audience, there's opportunities to rebuild everywhere in your life. When things get stale, you always have that opportunity to reinvent yourself. And that's what I was able to do. When I was able to do that, I've really like 10x my position in life, and not just financially, just across the board. Found a love of my life. Created another family. I mean, it was a beautiful thing, where one thing was dying, another thing was being created. So, I would really push that out to people being like, no, no, like you feel like you've hit a glass ceiling. That's just a glass ceiling. You could, you always pivot and break through and do something else. And there's nothing wrong at any level of the game, stopping and creating something new. And I think that's what I really want to, tell people is, you're not just made for one thing. There's so many at bats, and you just need to realize that you can go out and take those at bats.
Great story. A friend of mine is a big fan of the saying that universe closes one door, it opens another. Moving on now. What first drew you to Bitcoin and crypto, and what convinced you early on that this wasn't just another speculative asset?
So, I mean, I've always been interested in technology. I mean, after I got out of school, I got into digital marketing. I didn't think advertising was going to last in print too much longer. I had a lot of friends that were going to out of college to, sexy print ad, agencies in New York and LA. I stayed behind in San Diego and I started joining up with, a rising digital group in town. San Diego was really, a hub for the top digital marketing agencies in the US at the time. It shockingly wasn't the big cities. They were very kind of slow to adopt it, even in, the Bay Area. It was nice. It was right in my backyard. I took a bet on it. I said the search engine optimization piece is going to be huge. I think people are going to search for things this way, not, look in a magazine or, look in the newspaper or see a commercial. So, I bet big on tech, and then, so that was kind of my first play with digital marketing. And then as I was in that, I was always looking at different tech, scenarios. And when I saw Bitcoin come out, it was interesting. There was actually a person in our office that was a former Sony developer that we hired. And he gave us a presentation in front of the office one day about Bitcoin and, how, a peer-to-peer currency could really change, how things work and how it's really that it could be the currency of the internet. And it was amazing. And we got looked at it as a company. We thought about it. We were even looking at little miners that we could buy. And ultimately, we kind of said, well, you can't really spend that money. It's kind of phony baloney. And we didn't go for it in 2012. So, fast forward about 3 years, we started to get more clients. We started to get some logos that are, very recognizable for most people. And, of all those big logos, I noticed a person that came in to our agency that was in the crypto space. His name was Marco. And his company was Genesis Mining. And Genesis Mining was one of the largest mining operations on the planet at the time. This was a German fellow, younger guy, probably his late 20s, maybe early 30s at the time. And he was spending more in ad spend, than most of our other large clients. So I was like, I really want to figure out what this guy's up to. And he's basically selling terahash. He had a operation in, it's not, Iceland. So he was using geothermal. He was a brilliant guy, and became friends with him. He really wanted me to buy some crypto. And this was early days Coinbase when there was only like Bitcoin, ETH, and maybe XRP. So I was collecting, basically Bitcoin and ETH at that price range, and a little bit XRP as well. Started just kind of buying it and just consistently was buying it at these very low prices, sub $10 Ethereum, $1,000 Bitcoin. And I really was able to hold on to it for a long time. And that's really what got me going. And really, when I just started kind of, slowly collecting and hodling, I tried the trading a little bit, wasn't good at it, but luckily I just held on to it. And to this day, I pretty much have most of it.
Nice. And at some point, obviously, you realize the tax implications of crypto were far more serious than you expected. Was there a specific moment or mistake that triggered that realization?
Yeah, there was. In 2021, we were going, looking at the M&A side of our sales of our company in the digital marketing space. And, during that, you're having, the big four kind of run with your audit for your company. I also had some big four people working on my personal account. And they were able to, identify, they were looking at, everything their company was doing. They're also looking at us pretty hard personally. It was a larger acquisition. So, there's a lot of things that they look at, including the integrity of, the people selling the company, right? As part of, as someone that was a, uh, partner in the group, they're taking a hard look at you, and that means your taxes as well. So, the Big Four came back to me, the Big Four that I was working with my personal tax, and they basically said, "Are there any skeletons in your closet?" And I said, "Oof, that's a tough question to be hearing from you guys." I'm like, "You've been handling my taxes for a while now. We pay you a lot of money, and I think that you should know better than I am. What are we talking about, precisely?" And they go, "I think everything's fine in your portfolio, Nick, and you pay all your taxes, uh, and but the issue is, we what's going on with your crypto?" And I go, "Oh." And this is the height of 2021 bull market. So I quickly was not paying attention to this. I had other things going on. I opened up my crypto portfolio, and it was eclipsing 8 figures. And I was like just blown away. And I was like, whoa, this has really gone out of hand. This is, in a good way. But also I felt like I was the smallest guy in the room and a big target on my back. I was like, I haven't, and I know I haven't reported this, I haven't really sold too much. So like, do I need to report this? Where are the rules? And, ultimately they said, we'll handle it for you, Nick. And 3 weeks later, they came back to me and they said, yeah, you owe, $3.5 million or something to that, effect. And I go, well, I haven't sold anything, and I remember I sold during FTX, and then because I got spooked, and I think I bought back in at a later date. I'm like, "Are you accounting for any of this movement of," and they go, "No, not really. We can't really figure out your cost basis, so we're gonna give you a $0 cost basis, and we're just gonna have you pay it." And I go, "Ooh, that doesn't sound good. I don't want a $0 cost basis. Like, I mean, this is, that's going to cost me a fortune. I haven't sold anything. So why would I just assume that?" And they go, "Really, we can't figure it out. We have all your exchanges. We can't really match everything together correctly. We don't know what your trading activity was. So we don't feel confident in just, we think a $0 cost basis would best suit you." So I said, let me check with some other people. Did some due diligence, ran over to found someone in the Midwest. It was a gal that was literally working out of her basement. She was former Ernst and Young, and ultimately she helped me out with my stuff, and she was able to come back with a 996 loss against future gains. With my trading activity and some of the losses I had incurred along the way, and it really just opened my eyes to crypto accounting. I was like, whoa, there's something here. So here I am getting out of my other company, officially, and then now I'm sitting here. I'm like, what are we going to do about this? Like, is this a wealthy person's problem? Is this an every person? Does this affect everyone in crypto? Like, how big is this thing? So I really started scratching the surface at that point, and doing some R&D to see if this is going to be a viable company for me.
Do crypto taxes differ from all the other stuff that you've dealt with in traditional business exits or equity investing, that type of stuff?
It's a great question. I think one of the best ways to explain it is, our service is kind of like crypto bookkeeping, but it's quite the opposite in a lot of ways because, bookkeeping is typically the lowest prong of accounting. Bookkeepers don't need a lot of education. You can, start using QuickBooks and take some classes and learn how to categorize things. And having a good bookkeeper is, meaningful. You want to have, good books. In our space, it's more like a forensic auditor. Since decentralized exchanges do not speak to one another, they're completely decentralized. There's one here, there's one here. They're not passing cost basis to one another. So they don't have to tell you if you're switching, or you're basically transferring a Bitcoin from, your Coinbase wallet to a Gemini wallet. Those exchanges don't have to tell you what you bought your Bitcoin at Coinbase and pass it over here. In fact, you're going to have a wrong 1099. It's going to show that you sold it here because they want to default to it because they don't know that you own what wallet it's going to and if you own it or not. So they'll just say, oh, it left our exchange. So therefore you sold it. That's a taxable event. And then when it shows up at Gemini into your other wallet, which is non-taxable because they're both your wallets, that's like taking a $20 bill and switching it from one pocket to the other, still your pocket. So it's non-taxable, but it will show up there at a $0 cost basis because the exchanges are decentralized, not speaking to one another. So that's one of the biggest issues. If you can understand that alone, just a simple wallet swap that everyone, that almost everybody does, and that becomes a taxable event, you realize that there's a big issue here. So the cost basis is a big issue. It's not being passed correctly. So you kind of have to have like a forensic approach to chasing that cost basis from one exchange to another, from one wallet to another, and stitching everything back together to get the full accounting picture. And that ultimately, that's what we came up with. And that process is called digital asset reconciliation.
Many high earners, founders, and even professional accountants, as you were talking about, misunderstand crypto taxation so badly.
It's an interesting thing. I'm not going to call anybody out, but I've had a lot of big phone calls lately. We've been really lucky, and in our network, and people are really starting to understand what we do inside the crypto space for accounting and for digital asset reconciliation in particular. People are starting to understand that more on the tax side, and I've talked to a lot of leaders across exchanges that almost everyone would know if you are in the crypto space. And, so I was having one with one of the leaders the other day of a very big exchange. And I brought up cost basis. I said, this is, if you, cost basis is what you purchase your, coin for, plus any given fees it costs to actually buy that, purchase it, and that's what you paid for it. So that cost basis is a concept, a pretty cornerstone concept for accounting. This individual is very, very intelligent but was like explaining to me cost basis. So I think even at some areas, accounting is not always the strong point for leaders in companies. That's why you have typically an accounting department or a CFO. And I don't think people realize what a big deal this is until they go and sell, their crypto and realize that there's these huge gaps and there's these phantom gains that they're paying way too much on taxes for because they're not reconciled correctly. So it's usually a cause and effect. Like usually they, turn in their taxes report and it's incorrect, their 1099s, and they get wrecked with their gains that they're paying that they shouldn't be. And then they're trying to like reverse engineer, well, what happened here? And then they ultimately come to the result that, oh wait, there's a reconciliation that needs to occur here on the crypto side, and we didn't do that. And my CPA, this is in their wheelhouse.
It kind of speaks to my next question, which is what are some of the most common mistakes you see people make with regard to crypto taxes? Is there anything other than the reconciliation that stands out?
Yeah, especially this year, the 1099 DA for digital assets. So before you were getting a 1099 issued by your exchange where you would onboard off. Now they created one that for 2025 tax season, which will be filing this year, is going to be called the 1099 DA. They just sent them out from all the major exchanges. So your broker or your exchange will be sending these out. The DA is kind of special because it stands for digital assets. It's a 1099 specifically for crypto. And what is that telling us as a public? I think that's telling us that crypto is now underneath the microscope. I think a lot of people think that crypto is anonymous. It's not. It's a public ledger. It's a global public ledger that you can access. Just like you can access the internet, you can access a block and you can see what the transactions were. So you're not anonymous. YC makes you less anonymous. So if you ever want to off ramp any of your money, you're typically doing it through a KYC exchange, and they're going to be able to see, your driver's license, everything else that you had to do to get on the exchange in the beginning. So everything is really traceable and trackable in what we do. So I think that's the first thing is we got to blow the smoke out of that, out of the room rather with that myth, that your crypto's anonymous. It's not. It's this is a better accounting system that we've ever had, and it's keeps things accountable and it keeps things from, the numbers being fudged. So, that's a big one. Back to the 1099 DA though, this is going to cause havoc. The 1099 DA means one, you're under the microscope of the IRS. They have a specific form for your, that's being reported to them, and that's also being reported to you. So they know that you have your crypto, and that you should have to report it now. If you don't think so, they have the numbers. You'll probably start sending out notices here soon if you don't. And then the other play is they will only have to report the proceeds this year, not the cost basis. Now, I keep saying this cost basis thing. This is the big Achilles heel that you're going to miss, because you're going to say, why did I pay so much, or why did all my gains get erased? Well, if they're only reporting the proceeds, so let's say, you sold your an ETH at $4,000, at the top, and you caught it at the top and sold it for 4,000, but they leave your cost basis blank on that form, that means they're just going to assume it's a zero. So now you're paying $4,000 worth of taxes. And that's not how taxes work. You're only supposed to pay on your gains. So if you acquired that ETH at $2,000 and you sold it at 4,000, you should only be paying taxes on $2,000. So that's not what this form is going to show you. It's going to show you that the whole thing was a gain, 4,000 in that specific example. So, I really want to point that out to people, that so many people are going to get all their gains erased just by not filling in that blank. And the way to do it is you can either, use a DIY tax software if you're good at reconciling your own trades, which most people aren't, and then, or you can use a tax service, crypto tax service, like we provide, and we'll be able to plug that number in for you and save you quite a bit.
What if somebody has, say, they were buying many years ago here and there and sold at or near a peak? Is an option for them to just create an estimate in good faith to have some kind of cost basis, or is that not the way to go?
That's, you can be audited for that. If it's mismatched from the data that they're getting and you're just kind of throwing a number out there, and guessing, I think that, you're leaving yourself, exposed, for an audit. And if they see two contrasting numbers, one that the exchange gave them and one that you, are reporting for yourself, that you think is, air quote accurate, I think that you leave yourself exposed. And I think that, that's where we're going to start seeing more of the audits take place. Perhaps in the past, I think that the IRS was just happy for people to report their crypto gains, and pay their taxes. But now I think we're going into another chapter in, due diligence, and for them to really look at this in a more meaningful way. I think this is the last, there's no more, maybe I'll file next year. I mean, with the 1099 digital assets form, it's pretty, clear that digital assets are under the microscope, and that you should, pay up and, make sure that you're reporting accurately. With that said, there's still a lot of opportunity for, optimization, cost-based modeling, things that you can do to reduce your taxable liability legally.
Speaking of that, one good software option for tracking your transactions is Coin Tracker. You can just plug in your different exchanges with an API. It'll import all your transaction data for a given year, even give you exportable forms for TurboTax or in other formats. There'll be a link in the description to Coin Tracker for anyone who wants to sign up. Could you describe where a software like Coin Tracker falls short and what Count on Sheep can help people with beyond simply tracking the transaction?
Sure. I mean, CoinTracker is a great software. They have a lot of great development behind them. One of the cool things that they've done too is they've taken that 1099 DA, and they have this like ingestion kind of piece that you can do, where they will take your 1099 DA, they will upload it, and they will actually be able to kind of like, compare it with your reconciliation to make sure it kind of ties out nicely. So, kudos to them for getting that done. That's a lot of the other softwares haven't been able to figure that out yet. So they're kind of first to market with the 1099 DA, and helping that whole form tie out correctly for you. So big fan of theirs in that sense. I'd also say, from an organizational standpoint, is where these things really went out. Yes, when you're defining a Count on Sheep versus a Coin Tracker, we're actually on the same team. It's just the fact that, we're a service that, it's done for you. So if you want to trust every reconciliation and it's done by a professional blockchain accountant, we have former Big Four staff, internally. So, we can really create the correct audit trail for you within that reconciliation. But as far as the software itself, like CoinTracker, it's great as an aggregate. So it's great for taking all your wallets from all over the place and all your different exchanges and getting everything in one picture. I knew it was such a relief for myself to be using the crypto tax software when I first got involved. And I was able to see all my accounts, all my exchanges from multiple years, all in one place. That is really that first sigh of relief. Then it has another part of the software we can go in and you can actually, tag your trades, your sells, your buys, your airdrops, and all that kind of stuff. So, depending on how thorough you are and how, nuanced, your capabilities are in crypto accounting, it's definitely can take a stab at it. As things get more complex and you're using different kinds of trades. You're doing yield farming, you're doing all these different kind of DeFi protocols. That's typically where we come into play and help clean that up for you pretty quickly. If you're kind of just trading on one or two exchanges and have just a few wallets or so, typically these DIY softwares are truly do it yourself, and you can get your forms printed out yourself.
Do you guys provide any kind of audit defense account on sheet?
Yeah, so I mean, we do create like a defensible audit trail. We are a keep your own CPA, so don't feel like you have to, these relationships that you've had, with your CPA. CPAs are great. They're great for filing. They're great for giving tax advice. They're great for a lot of things. Are most CPAs good at blockchain accounting yet? No, it's a new it's definitely a new part of the accounting experience, if you will. So, they're working with us to get these, defensible audit trails that are done within, a platform like CoinTracker. And we can really get in there and work those numbers. And, the nice part about it is if your CPA has a problem, or even if the IRS has a problem and comes back and, wants some clarity on the way you did things, it's us being able to, talk to it's a CPA on our end, talk to your CPA and say, this is exactly what we did. These are the SOPs that we used. And this is the guidance that we provided to get your reconciliation done the way it was. So I think that's, a big relief for a lot of people. Otherwise, that's coming back on your shoulders if you choose the DIY route.
Super valuable. So, for listeners who are early, successful, or sitting on large unrealized gains, or maybe they've already realized gains last year, what should they be doing right now to avoid the kind of tax stress that you went through years ago?
One of the things I would do right away, and this is something that we started with as well, is, there's an opportunity to tax loss harvest here. When the markets are down, and what we've realized with wealthy clients, or what I've seen personally, is they treat their accounts differently than, one of our just, novice trader clients. Really what they do is they start getting involved usually in Q4 with us. They are typically going through and actively looking at their portfolios and seeing things that were down. When we saw the downturn of the market in Q4 of 2025, we saw a bunch of people coming in and they already had their reports. They took everything in red basically, and they started selling those positions. Whether they bought back into the position at a later date, or whether they do, buy, find other positions that make more sense, or use a flight to safety, like, maybe sell out of, coins that are more speculative and go back into kind of more blue chip, like, call it Bitcoin, ETH, perhaps Solana. So we're seeing a lot of people reallocate, but with tax loss harvesting, they look at everything in the red and they take those losses. Wealthy people do not care which way the market is going. I know that sounds shocking. Everyone understands a gain and that you're making money, but very few people understand the value of a loss. But in terms of, taking losses against future gains for tax purposes, we see a lot of people doing that. And, it's a pretty common play amongst the wealthy. But, a lot of people don't understand that it's not a play that the wealthy can use. You can simply sell out to a stable coin and then buy back to something else, or you can stay in that stable until, you feel like you want to re-enter your market position. So taking losses is, part of the game as well. We don't see enough people doing it, but we do see our wealthy clients do this consistently, and it helps them out with their tax bill enormously. We've always seen, Bitcoin would take some enormous dips along with the rest of the market, and we always see these big recoveries. So if you're not taking advantage of, these losses, that's an issue. And then, I'd say just one more thing I would tag on to that is the, cost-based modeling for 2025. This is going away this year. You used to be able to choose, whether you want to use first in, first out, or, last in, first out, these different kind of accounting methods that you want to be judged on. And typically, first in, first out's not the best. That's what we're defaulting to on January 1st, 2026. That's what the IRS guidelines state. And ultimately, that means that, if I bought an ETH for $2 back in the day, circa 2014 or whatever, and I bought an ETH, the other day at the top at 4,000, and I sold something, I would typically want to realize, the $4,000. I want to say, hey, I sold the $4,000 ETH, and I maybe take a loss or break even in that way. So I'm not paying a bunch of tax. But with FIFO, you have to go all the way back to the first one you bought. And that's usually the one that you got for the best price. So then, if it's $2 went to 4,000, you're paying like $998 in taxes, liability. So it's not the best tax, method that you would like. But 2025, since we're in that tax season still, you're still allowed to choose your method. So highest in, first out is what I want to choose in that scenario, where I sold the $4,000 ETH first. So, you can still switch to HIFO, and then optimized HIFO, which is very important to know about 2025 tax season. That could save you a tremendous amount of money just by, switching that optimization. You can do that in your coin tracker software, by the way. You can switch between your cost basis methods, although it will default again to FIFO this year, which is going to be not that great. And then, the 1099 DA, I'm telling everybody that cost basis will be left blank. The brokers aren't going to fill that in for you. And ultimately, you leave that blank, you will be paying so much in taxes, it's going to be noticeable. So if you can't calculate your cost basis, please find someone who can. Certainly, we're glad to help. And it's very important that you are able to fill that in this year, report that, because if you get a $0 cost basis, you will be paying an enormous amount of taxes.
As regulation and enforcement increase, what mindset would you say Bitcoiners, crypto holders need to adopt to both protect their wealth and their peace of mind?
Great question. I would, honestly, I'm telling everyone now's the time to reconcile. Yes, if years ago, I don't think this was being as monitored as much as, there has been guidance to pay your crypto taxes for quite some time. I think a lot of people have just kind of gotten used to not doing it. I can tell you that this year is going to be very much different. I can tell you that we even saw enforcement letters go out last year that people were bringing to us, being like, "Oh my God, I'm being audited," and the first thing you need is a reconciliation to show them, to show the IRS exactly what you owe, what your cost basis was that you don't owe tax on, what your gains actually were. So a lot of people come to us after the fact, and we noticed that we saw a bunch of those go out in May last year, right after the tax season. People were getting hit with these notices that the IRS was telling them that we see you, we see that what that you're not reporting, and we suggest you do so soon. They were not super like, we're going to audit you right away, but they were just more warnings. I think we're going to see more of the serious, audits go out here, into this tax year, into next. IRS is really going to start cracking down.
I got a letter like that last year. It wasn't an enforcement thing, like threatening, but it kind of freaked me out because it was just sort of a notification, more or
Yes,
less.
I see you. It was like,
Yeah.
there's a 6173 and a 6174. They're both various kind of, I see you, you're on my radar is more how a lot of, CPAs have been interpreting that, that I've talked to. So yeah, they weren't very, necessarily like, you're being audited, but it's the first step. They have to build, first they have to kind of warn you, and then, they might send out maybe perhaps another one, or show me something, and then ultimately it can lead into an audit. And, audits are painful. A crypto audit could lead into various other audits across all your other accounts. So, it's important to be able to have a reconciled crypto portfolio with the right tax report, with the right reporting. So, yeah, that's ultimately what the tax authorities want to see.
Yeah, I handed it to my CPA immediately, and he just said, don't worry about it. It's just notification thing, no big deal." And that was a relief. But of course, now I know I'm under additional scrutiny, so I have to be super careful with things going forward, even though I always have been. And so that was why it kind of shocked me because I was like, wait, I'm pretty sure I've done everything correct to the T so far in previous years. So I don't know why. I guess they're just really like anyone who's on the radar at all, they're sending out these letters. And yeah, but even I remember back in 2020, they introduced a little box you have to check on, I don't remember what form it was, and just saying, have you sold basically, do you have any taxable transactions involving cryptocurrency and digital assets? So
Absolutely. So, to your point, you're one of many who's starting to get those. But yeah, I would take it serious in the effect that that's one of those things where they're letting the public know. And there's so much that once again that myth that we discussed that crypto's anonymous, that no one knows where it is, no one knows who I am. No, through just onboarding on the Coinbase, they know who you are. Just but you can't get onto a crypto exchange without KYC. And then again, if you get into some decks or something like that where it's more private and people can't see it, well, then you just can't use your crypto. Or you're not going to be able to really spend it. You're not really going to be able to off ramp it anywhere. And when he does come to off ramp it, they're going to have a lot of questions too. To get your money out. So it's better just to reconcile it, and report it as it comes, and that's going to keep it just straight and narrow and keep the tax authorities from bugging you.
definitely, and even if you use uh, your own hardware wallets, software wallets, for example, if you bought those coins on a KYC exchange and then you transferred to one of your own wallets, well, guess what? Now that address is associated with your identity, and any activity going through it, out or in, is easily traced back to you, especially with tools nowadays that authorities use, like chain analysis. They can do in depth investigation into the blockchain. So even if you sent it back and forth chain of wallets all over the world and stuff. Yeah, it's not as anonymous as people think. It's pseudonymous in that one public address may not necessarily be tied directly to your identity, but for the most part, yeah, I personally I just act as if everything is as public as it can be, and I try not to do any transactions that may even look shady or even make it look like I'm trying to hide things, because I know that worst case scenario, if I were ever to be under that level of scrutiny, uh, again, that's all public out there, and yeah, everyone can see all of those transactions. Just because a particular address doesn't have your name associated to it, at some point, there's going to be a chain, sort of a trail that was left. So, starting to wrap up here, I just want to ask. I liked how we started this conversation, just talking about life and business, and how there's so much more than just the finances. So, what would you say? What motivated you to start Count on Sheep in terms of, trying to bring others the peace of mind that you really needed in those early years? What would you say the mission is behind the business in that sense?
Uh, the mission is just to provide clarity in a space and and to give something back to crypto too. I mean, crypto has had its own, its own growth, and its own, and as we continue to legitimize, it and show the technology and how powerful it is, bridging the gap between traditional accounting and DeFi accounting, needs to be, put together. Someone needs to build that bridge. And for some reason, especially on the tax piece, and no one is. And also, getting out there and warning people about it before it becomes a problem. I don't want this to be a trap, a bear trap that everyone gets their foot stuck in. And because no one's telling you these things. You don't really know until you know. And a lot of people aren't going to hear my message, and they're going to get their tax report back and say, I'm out of crypto. I thought I was supposed to make all this money. Or I thought, it showed I bought for this and I did this, and they taxed me all of it. And they're not going to ask the right questions or have access to the right people. So, I really feel like, this is something that's going to help, um, you know, s- say, continue to prop up the crypto industry and continue to, help people. Yeah, it's taxes and no one wants to hear that. But at the same time, staying compliant is going to be a big thing about pushing this into the future. And the other piece is there is so much optimization and tax savings you can get from your crypto. I mean, there's so many laws and guidance that's left open for you, where you can we talked about tax loss harvesting. We talked about cost-based modeling. We talked about the 1099 DA missing the cost basis. These are all things that you can rectify and save a tremendous amount of money. Where you're reducing your tax liability quite significantly. So, getting that word out there is what wakes me up in the morning. I know I needed the help with mine, and it turns out this isn't a wealthy person's issue. This is a problem for all of us, and we're all in the same boat, and we all have access to the same guidance, and we can all use these same uh, ways to get the best taxable income liability outcome possible. So, I'm here to get that word out.
Good. All right. Nick, how can people get in touch with you and count on sheep?
So people can get in touch with us. The best way to come book a meeting with us is